Well, welcome to Monday. The S&P 500 was up almost 1.2% today, which is fantastic. A great start to another week. We've had a couple good weeks in a row here. And we had some good news from Moderna, which is one of the vaccine manufacturers. Very exciting. And so I spent the weekend looking at what's happening with the market and how this rotation is working out. We talked last time about the difference between growth stocks, which is mainly what we're invested in, companies growing quickly, and value stocks who are inexpensive right now compared to their earnings. And obviously, if you're investing there, you're hoping to buy low and they can come back up. Two different concepts. And so I did find that very strongly, I think we should be making some moves towards value, and we've done those today. And I'll show you some examples here. But overall, I think it's really important to be flexible. I've learned the hard way. You cannot be stubborn and have one particular methodology. And I don't have one particular methodology. I've mentioned in the past that I don't think what we're doing, so far this year would last forever, and it's not going to last forever. So one of the, I guess, the entertaining pieces of the market for me, I never get bored looking at the market because it never actually goes in the same patterns over and over and over again. Everybody figures it out and it starts to do something different. So I think we're seeing some of that change right now, and I'm responding to that. And I'm very optimistic because what we bought today did quite well, actually. And so let me just share with you very quickly what I'm talking about here in terms of um, growth versus value. Okay, so what we have here is our innovative technology index. We've had this for quite a while. We bought it back here. Concept was, when things are running, we want to catch that wave and ride that wave. And boy, did we. The 50-day moving average is going up, the 200-day. But if you look real closely here, you can see this has been kind of churning sideways here for quite a while, really since the beginning of September. And even though the S&P 500 has broken out recently, this one is still kind of sitting near the middle of its range. So this is what's causing, the issues to be, for me, to look at the portfolios. So now value investing is completely different. You are not looking for a giant run up because by the time you get a giant run up, it's no longer a value stock. That means the price has moved up a bunch. So here, this is a value index put together by iShares. And what they're doing here is they're screening out companies with higher volatility, higher debt levels, and negative earnings analyst reports. And they're taking the rest and they're ranking them by what their price is versus their cash flow, what their price is versus their dividend, book value, et cetera. They're looking for inexpensive companies versus these measures. And you can see here that this thing has broken out. Today it broke out some more. And so essentially what we have right now in our portfolio is three main pieces. We have the technology components, different types, but technology. And then we have the value components and we have the clean energy. So my outlook is that when there's good news about the vaccine, and I think there's going to continue to be good news that happens here, the value part will do well. When there's bad news about the vaccine, I also think that's possible. A few instances here where things don't work out exactly as expected, then we're starting to see, maybe technology doing well in those environments. And clean energy has been doing well in both environments. It continues to chug along because it's kind of a global phenomena there. Very, very strong theme altogether. So, the market looks forward. And so if the market thinks that, you're going to make 10% ultimately on this investment, it might move up 5 based on where it thinks things might go. And then if reality at the end comes and it is what they hoped, it give you the other 5. And maybe it's even better than you hoped and it might go up to 12% instead of just 10. But if the reality doesn't work out, then it takes away the 5. So you can't wait for, all of these things. We have to figure out the rest of the trial for the vaccine. Still kind of early there. We've got to manufacture this. We got to distribute it. We got to get enough people to take it, et cetera. There's quite a few different things that have to happen, but the market isn't going to wait for all of those things to happen. So you do have to nibble some here at this point in time. And I'm really happy. Again, today was a good day for these pieces. I think it's sort of justifying the research that I did over the weekend here. And, we did some good broadening of the bond market also, pieces in our portfolio. You'll see those trades come through. We bought more broad market indexes in the bond side and more high yield, both of which should do well in this environment. I'm very optimistic there also. So That's what's happening right now. Wanted to let you know what was going to go on here with these portfolios. Some fairly, substantial changes as a whole, but I think that this is a really, big deal that should help us, give us a bit more diversification. So you've got, those growth ones that are going like that, and then you've got these value ones where you're buying cheap. That is diversification, and that's what we're shooting for here. So very excited. Let's see what happens tomorrow, and I'll talk to you then. Thank you very much.